Hello, welcome to Rational Radio, the webinar, and let's just give you a little bit of music to start. It's Monday, the 4th of May, and welcome to Rational Radio, the webinar edition. A pretty good turnout for our Rational Radio as always, but especially so this week. And of course, in studio, we have our two esteemed guests, David Shapiro and Gigi Alcock. We will later be joined in the program by Michael Jordan and Magda Wierzicka. But let's just kick off with our first two. David, I have made a little slide for you. You were naughty. You didn't send me the bio that you had to, so you have to live with this slide. I love that picture of you. Do you wear it pretty much all the time?
No, not at all. I had to do that for a webcast. Somebody wanted to see us in a mask, and you'll see that my hair is a lot shorter than it was there as well. A lot more grey in that picture. I look much older than I really am, so I'm not proud of that picture.
But it's quite a nifty mask. Ours are pretty much homemade versions. Where did that one come from?
My wife went out. She's a specialist in these kind of things, and looked for one that we have to continually spray and keep, and the whole family have got them. So that you can't run in those. You know, you dare not go out, because if you go running in one of those, you suffocate within the first 100 meters. You're dead. You just fall over. So those are only when you go shopping at Discount or something like that. So.
Well, I did see, David, we went out yesterday. Unfortunately, today I had lots of things on my plate, but we went out for our exercise between 6 and 9 yesterday, and I was amazed at how many people in our area, which is Bryanston, the fairly upmarket area, were out there walking around mostly with masks, excepting the runners. So I can see what you're talking about. If you're a runner, it really isn't the time to be wearing masks, I guess.
No, and that's why no one greets you. You know, you can recognize all the dog walkers and everybody else behind their masks, and you walk past them and say, "Hello, John," or something like that, and they kind of grunt at you as though you're an outcast, you know, for running and not wearing masks. So whatever. But Alex, the number of people that were out over the weekend is just quite astonishing, and you know, everybody coming out and just airing themselves, walking their children, just walking. You know, you can see what lockup has done to them. They just need some fresh air, and the weather was magnificent. I mean, even today, it's really beautiful. Such a beautiful, heartfelt, you know, autumn. Yeah,
we're very
magnificent.
privileged to live at this in this part of the world, certainly weather-wise. Gigi Alcock, you're on screen now. Gigi, you've really plugged into the informal economy, Carthonomics, etc. Your gift to the world, unpacking lots of things that many other people don't see. But that means you're well connected there as well. What's the feedback like coming from the Kasi?
Hi, Alec. Yeah, so I think that, in fact, going around, I live in Kailami. Going around Kailami, it felt like I was in Soweto. You know, everyone was walking in the streets, and the kids were playing in the street, and so on. So, but yeah, the fast food outlets were allowed to open with deliveries only on Friday, and which I think was a really good thing. And there's a huge number of these outlets have opened. It's a moot point to say, are they doing deliveries or just allowing takeaways? I'll leave that there. But I think there's quite a frustration really around, and I said this right at the beginning, around people wanting to get back to work, around the issues of people needing to work. So I think that there's going to be increasing ignoring of regulations. This is month end with social grants and stuff paid, so the stores and the spizes and stuff have been quite busy. But I sense a very strong, from all my network, frustration at the moment, people wanting to get back to work.
Yeah, it is. There's lots of debate. I got an email from somebody today who said that there are something like 500,000 people saying end the lockdown, whereas 5,000 people say keep it going. That's something that we'll be talking about, no doubt, as we go through the program. But let's start off with the markets generally, David. I'll bring up in a minute how they are performing at the moment, but how are you reading things this Monday morning?
Look, we're in a difficult period now. But difficult is that no one can see ahead. No one really knows where we're heading. We're in that murky period. The news that's coming out on the medical side is improving, as we saw from Gilead last week. Also on the vaccine side, there tends to be a belief that with so much money being thrown at the problem, that by the end of the year there will be a vaccine. So I think on that side you're starting to get better news. On the economic side, the numbers that are coming out are very distressing. So I'm talking more in a global context now, but I think it's going to be only by the year end that we'll start to see better numbers coming through. And there's still a lot of concern about where global economies will be, in the next 3 months, corporate earnings and so on. So it's a difficult period, and we're also going to have to count the cost. So you can understand why those 500,000 people want to come back to work. They're frustrated. They're not earning. We're seeing a lot of small and medium-sized businesses just closing up. Hairdressers, spas. I'm talking SPAs. Not the spas or spa shops and so on. So I think globally it's a big issue. So I think you've got to be patient. If you're going to stay in the market over the next, if you want to stay in the market, just be patient over the next month. It's going to be a very, very difficult time to negotiate. Alec, the one thing I must say is that the market is actually short. What I mean by that is money managers are accumulating huge amounts of cash. The traders, those who want to be short, are short. So that tends to give some kind of underpin to the market. So, we're not likely to see any major shifts downward, but I think the upside shift is going to take a little longer. It's going to take some time. Be patient. That's it.
I'm just looking at the screen right now, David, and the bigger movers on today. Obviously, the penny stocks are dominating there, but as you go down the list, you see Sasol that's down 11%, EOH, wow, 335, down another 11%. Textainer, I think that's the Jowls. And then you got Tsogo Sun, which somehow picked up 9.5%. But this kind of volatility is something we need to get used to, I presume.
It's crazy. I've never in my life seen moves like this, 10% moves in a day, either up or down. Liquidity is very low as well, meaning there's not much of a market out there. The only markets that we're seeing in a big way are in the top end of the market, which would be Naspers, Prosus, every day the gold shares, some of the miners, those tend to dominate trade. Trade's been okay. It's been in the region of about 20 to 23 billion a day. It's light, but it's better than we've seen at the beginning of the year. So there's a lot of trade taking place, but it's not in those low liquidity stocks, not in the smaller numbers as well. So that's why we're seeing the kind of volatility that you're identifying now on the screen.
But even there, now I've pulled up the most value traded, and as you can see there, the top 20 are all down today. So it hasn't been a good day at all so far, with some really big hits being taken on some of the stocks, as we can see there, 8% for ABSA, 8.5% for ABSA, Richmond 3%, Nedbank 6.5%. These are really big moves, David. If you're an investor, presumably, and Capitec 5%, you just sit on those sidelines.
That's catch up from Friday. Remember, we were closed, and Friday was a bad day for markets. It was the 1st of May, so there was a lot of rebalancing in global markets. There's still a move out of equities into cash, but I think on Friday, US markets were down 3%. So also this morning, we're just playing catch up with where markets are going to go. There's further downward pressure on global markets. Sasol, the oil price not looking good again, taking some big hits, and they're coming under a bit of pressure. There was actually quite a good, I must say, Abdul Davids wrote something in Business Day this morning, or was interviewed in Business Day. Gives you a good insight into Sasol, worth reading, if I can recommend. Just talking about the sale of the Lake Charles, or the proposed sale of the Lake Charles project, and how they, he's broken it up into areas where it's probably going to be the plastic side, not the specialized chemicals that they'll sell, but also that's saying that there are people who want to come in. So worth a read this morning. First decent insight I've seen into Sasol.
Excellent. Just to remind you that this is an interactive program. We've got the background from David. We'll get background in just a moment from Gigi as well. And as you can see on the screen, Michael Jordan is going to be with us in a few minutes too. But if you would like to participate, there is a little box down the end which says questions. Just click on that and write in or text in, or write in your questions. And if you I'll have a look at them. I can see there's one from Paul. I can see there's one from Peter, one from Paul. Put your questions in there and we will pose them to our panelists as we go along in the program. Gigi, from your perspective, is there any upliftment within the informal sector?
So I think, look, if you let's look at various categories. If you look at kind of what we've seen with the spaza sector, and I believe the same has been seen in the formal retail sector, is a growth of basics and in fact an increase in sales of things like flour, maize meal, those kind of things, and a drop off on categories like household products and those kind of elements. So it really is a thing of households focusing on food items in terms of purchases. So, if I was, I guess, any of the guys manufacturing maize meal, flour, etc., I think you're in a very strong position and will continue to do so. In fact, the spaza sector are complaining about shortages of things like cooking oil, flour, maize meal, and similar kind of products. So. But I think generally, because in essence, if we look at the informal sector, the only outlets that are open or sectors that are open are the spaza sectors open, the fruit and vegetable hawkers, and very limited opening of the fast food sector. The vast proportion of everything else, the gassy mechanics and auto sector, and anything outside of fruit and veg and foodstuffs is closed down. So I think that. And this is where, in a sense, I think we really have this big need for people to go back to work. I think I also need to point out that a very large proportion of our population is in that sector is immigrants, is foreigners, if you want to call them that. And we've seen these 10-kilometer queues for people queuing up for foodstuffs. I believe a large proportion of those are not South African, and they don't benefit from social grants. They don't benefit from all sorts of interventions. And I think there's a very big danger of this. We can't just ignore it and assume whether they're legal or not. What are we going to do about it? And I think that we're going to see a large number of the immigrant guys going back to work or reverting to crime and so on. So I really think we need to look at a solution for low income categories that goes beyond just saying you have to be 100% South African or and I believe that the opportunity, we can't also create a welfare state. So how do we find ways to allow these small businesses, these one-person businesses, to start entering the economy on a slow basis? I also think that we've seen, in essence, March, I said in our first talk back in the beginning of March, that the real impact is going to be felt in May. And I really see that. I think that people received salaries and were working in February and beginning of March to an extent. And I think that May is going to be a tough month.
Well, we're going to be following that on the Rational Radio program as we go through, but it's welcome now to Michael Jordan, the former chief executive of FNB, and a man who now describes himself as a wine amateur. I thought you were a wine professional, Michael. Don't you own or live on a wine farm?
Michael's muted.
Michael, have you muted yourself? Because you certainly are on our side. We can see you. Michael? Okay, I'll tell you what. We're gonna just it might be in the wine farm area. It could be perhaps the connectivity is not that great. Michael, as soon as you do hear us, or as soon as you are unmuted, just carry on and tell us, if you would, that you're there. I'll just carry on with a couple of the questions because we got a whole bunch of them that have come through here. Paul Hansen wants to know, anyone heard about any news about whether the global government bond index has sold its South African bonds yet? David?
I'm trying to find that out this morning. There's been no evidence in the pricing. What was interesting, though, is that the Rand, which Thursday morning was 1803, spiked on Friday around about 1880, 1890 is where we took off this morning. We've settled down slightly at 1875, which does suggest a little bit of withdrawal. But Alec, I sat through a presentation this morning, and I don't think that is confined to South Africa. I think it's a general trend that we have seen in markets where there has been rebalancing of pension and pension funds and other investment vehicles, where there's been still a sell-off, huge sell-off in equities, going into bonds or going into cash. So I think if there has been a sell-off, it's probably in line with what we're seeing in the rest of the market. But there hasn't been a major evidence of offloading of bonds. I think it might have taken place before. And just on the Rand as well, that's been dollar strength as well. It's not confined to South Africa. I think you'll find most emerging markets currencies have been under pressure. So to Paul, no. At the moment, no real evidence.
Okay. Michael Jordan, are you with us yet? No, still no. There's another question here from Peter Bodel. I told you, Peter and Paul. He says, if we allow, he says, as a Naspers fan, would it be better to buy 10% on the NASDAQ than Naspers on the JSE, David?
I had 6 of one, half a dozen of the other. I don't think it really makes a difference. I think there's quite a discount. Naspers is still trading at quite a big discount to the underlying investments. And also with Naspers, you're getting another array of investments. I like Tencent. I like Alibaba. I still think that's the area to be. So if the money's trapped here, if it's trapped here, no problem with buying Naspers. If it's overseas, well, you can buy Tencent. But I don't think there's a definitive answer to that. They both, at the end, they're both the same thing. Hope Bob van Dijk does something, though. And I think that's why we're buying Naspers, is that the hope that there'll be other areas, particularly in this kind of market, that do open up. And you know me, I'm a massive, massive tech fan. I still think that there's so much going to happen in the next 5 years. So I remain committed to that, to that area, and certainly to things like Naspers and Process.
Well, as you can see today, that's the daily trade on your screen right now. Actually, make it a little bit bigger. This is available to all BizNews community members who are premium members, which obviously everybody who's in this webinar is one of those. You go onto wsj.com and you can get through the day market pricing, and here you can see that today 10 cents around 400 Hong Kong dollars. Year to date, it's been very volatile, but still up at a pretty good rating. If we take Naspers against it, I hope it's still called NPN, David. Yep, there it is. You can see that it's in fact outperformed. Naspers has outperformed so far this year, and that's probably because of the buybacks that have been happening. And just to confirm that again, the blue line is Naspers, the black line is Tencent. So as you can see, from the beginning of this year, Naspers has outperformed Tencent quite nicely indeed, by about 18 18%
Sorry,
or so.
the rand as well. I think we forget to understand that, that the rand at the beginning of January was 14-ish. Now we're closer to 19. So in that nice purse price has been a massive rand devaluation as well. So anybody who is even who's been exposed to offshore markets in rand terms has really scored. I know you're going to be talking to Magda, but I mean, if you talk to her about those, some of the funds that she has, they've been massive outperformance as well, largely driven by some of the gains that we've seen in tech shares and also by weakness in the rand.
Indeed. I'm very glad that Rob Remus has asked this question. He says, how does Discovery's 25% ownership of Ping An Health affect its valuation? Well, I got all excited about this last week in this program, as you remember, David, because Ping An Health, which I didn't know was listed. Indeed, there is a Ping An Healthcare listed. So I scuttled off to Discovery and said, if you own 25% of this company, as you can see there, it has a market cap of 114 billion. If you work this out on the Hong Kong market cap, converted into rands, suddenly you've got a 25% share of this company, which is worth the same as Discovery's total listing on the JSE. And I was all excited and ready to tell everybody that Discovery has to be almost like another Naspers. Unfortunately, this company's got nothing to do with Ping An Health, believe it or not, in which Discovery has its 25% shareholding. I checked it with the company. They explained to me that Ping An is quite a complex organization, and that this is something called Good Doctor. And as you can see here on the Wall Street Journal, it's called Ping An Good Doctor's AI system. Good Doctor, Ping An Good Doctor, and so on. It's got nothing to do with Ping An Health, which is 25% owned by Discovery. So although Ping An Health in China is a valuable business, it is not listed, as we initially suspected, and it got nothing to do with another company, number 1833, listed in Hong Kong, called Ping An Healthcare. Rob, thanks for asking that question. It gives us the opportunity. Have we got Michael with us now?
I would hope so. Can you hear me?
At last. Hi, Michael. Sorry about the technical issues that you had to go through there. And I think that as the former chief executive of FNB, you must be watching what's going on in the markets nowadays after COVID-19 and thinking, my goodness, those investments that you made back in those years have really come home for the bank. Or are you considering it that way, Michael?
Alec, now is a very, very good time just for humility. I've seen so many people become experts on things like epidemiology, which is a word, as an Afrikaans speaker, I even struggle to pronounce. And everybody thinks there should be a lockdown, there shouldn't be a lockdown, they should have done these investments and so on. I am as confounded as everyone else. I am particularly perplexed by how well some of the overseas markets are performing when the real economic conditions are so incredibly bad. I know that it's because of money printing, and I can kind of explain it in retrospect, but I think these are some of the strangest possible times that we find ourselves in. And things like negative interest rates, massive printing of money, and so on. I just think it's confounding, and one needs to be agile and flexible, but an adequate dose of humility when looking at what's happening in markets.
Now, your company, Montegray, is a investor in a number of other companies. I think last time I looked into it, it's more than 24 investments that you've got. So you must have a pretty good understanding of the way things are happening or performing within the South African environment.
Yes, I've got about 25 little investments. These are all startups, and they are all technology focused, or there's something about their business model that is enabled by technology. And I'm fairly fortunate that most of them have done well in these tough times, and in some cases, progress that they struggled to make for many, many years before has been accelerated by this. To just give you one example, there's a company called Snaplify that offers all the textbooks that schools use in an online or electronic version. They've now made it available for free to all schools in South Africa for the rest of the year. And the rapid adoption of online education is something that they struggle to get going, and suddenly the crisis drives us into the future. So generally, the investments have done very well. Rain, for example, as a data provider, has seen massive, massive demand. But then, too, I am a wine producer, live on a wine farm, my wife and I, and as you know, there are 0 wine sales, and so is the accommodation on the farm. And there we actually have a lot of laborers that we are trying to keep employed. So we are equally affected by the real world. Now, the big challenge, I think, for all of us is to just survive for the next 18 months, because this thing is going to last longer than people want it to be.
I saw a quote that is going around, I think it's on Twitter, Michael, that is from Jack Ma, who says exactly that. This is not a time for dreams. This is not a time for ideals. This is a time for survival. Do you agree?
Particularly if you're a startup, it's absolutely crucial that you need to get to a cash flow positive situation, which means cutting down the burn or increasing your revenues or doing whatever you need to do. It's going to be a very tough time. Again, time for humility. I don't know when we're going to solve this crisis, but it seems like a vaccine could be 12 to 18 months off. And even if we find a vaccine now, it's not as if the economy is just going to restart by itself. So clearly, you need to prepare for the long run and prepare to survive, and that means cash flow, a break even. It's going to be much tougher to get funding. You know, funders are risk averse and holding back on all of that. I suppose the only bottom line is that at the end of this, at the end of, let's say, 12 or 18 months, those companies that do survive will be stronger. If it doesn't kill you, it makes you stronger. Some of your competitors will no longer be there. But for now, it's not about maximizing profits. It's about mere economic survival.
What sectors of the economy are unlikely to survive, unlikely to make it through this crisis?
Well, clearly there were some companies in some sectors that were marginal to start off with. So let's say printed daily newspapers. That's been an industry that's been in decline for a long time. We've seen some magazines fail. We've seen retailers, physical retailers fail. SAA has long been a zombie airline. Things like cinemas will suffer because people won't want to get together in large groups. Same with some restaurants, some bars. Commercial office space will suffer as people are starting to work from home. And sadly, some wine farms like our own are also under pressure. So really, it's the marginal businesses where there was a long-term negative trend. It's also those that aren't well capitalized, that don't have ammo in reserve. And then, of course, anything that accompanies this major shift from the physical world to the online world. It's just accelerating. It's moving to online shopping or online education or online broking or online retail, all working from home. Those businesses are going to grow rapidly, but it's going to be at the expense of, shall we call it, old era businesses.
So what happens if you are one of the unfortunates who's working in one of these imploding industries or businesses? What do you do?
Well, the best advice in business is always go back to first principles. Why are you in business? Who are you serving? What is the exact product that you're providing? What price should you be doing it at? And then to make the hard decisions around those first principles. You know, there may have been things that you knew you had to do, but they were just too tough to do before. Right now, you don't have that flexibility. Make the hard decisions. Often that would mean cutting costs. It could mean turning fixed costs into variable costs. As for pricing, generally you need to review it, and generally I think it should be lower in this environment because it's tough out there. And if all those things don't work, you should consider changing the business model, pivoting. A basic example of a pivot would be a restaurant that is now going into food delivery. I've got one startup that delivers premium wine online in South Africa, port to port it's called, but they can't deliver here. So they opened up a business in the UK using the software that they have now. So there are some growth opportunities, but you have to fundamentally reassess the business you're in. Sometimes you can pivot that business into a new direction. And there are other cases as well where you just need to call it a day and move on to something new.
It's so interesting because I guess it's hard once if you're part of the status quo, to see the reality. It's not difficult to understand the advice. Warren Buffett over the weekend at the Berkshire Hathaway AGM was saying a lot of similar things to what you're saying now, but it's that jolt that one needs to understand reality. How do you do that if you've got let's just say you had a publishing business, you had a print publishing business, how would you explain to people there that the world has changed?
You know, there's this famous line, and it's been attributed to so many people, that says, don't waste a good crisis. It really just means that you've got to be authentic with the truth, you know, face the brutal reality of your business and your life. I think that's the most difficult thing, is we are all optimists and you're hoping for the better. This is not as much a time as it is for hope, as it is one for facing the brutal facts. And actually, once you face those facts, then it becomes a whole lot easier to make the right type of decisions, armed by the facts that you need to do. So I'm not saying it's easy. Sometimes these things are incredibly hard, but it's a little bit like, you know, becoming more fit. You know, once you apply the discipline and you get into the routine of doing it, things are a lot better. I feel desperately sorry for people who are not in a position to do so, people who had jobs and can't even get to their jobs. I do think that in 3 to 6 months' time, we'll look back at this period and look at a whole lot of decisions that overall as a society were suboptimal, whether some of those businesses shouldn't have started operating yet. So I'm not saying that it's easy for nearly anyone, but even there are options. This is, for example, a good time to educate yourself with new skills. There are many skills one can acquire online for no cost. Many of these resources have been made available at no cost. So even there is an option to make some good out of this terrible scenario that we're currently experiencing.
Larry Hobson asks you, he says, with your involvement in online, do you have a view on how far we are from using satellite or other technology in school education in South Africa, Michael?
You know, it's interesting. I have 3 young daughters who happen to be in 3 different schools, and I can see how the schools have adopted technology differently. You know, my daughter, even, you know, my one daughter had to write exams or is regularly writing exams. Others are doing quizzes. Some can see the rest of the classroom. I think the medium is a little bit less important here, whether this is satellite or 5G or 4G or, I don't know, fiber or dial-up modem. That's just the connectivity layer. What is more important is content. Is there good educational content available out there? And there actually is. And as I made the point earlier, a lot of it is available for free. So the role of the educator is the most important one here. And that will change from somebody who is a topic expert to somebody who can actually stimulate curiosity and can then help somebody through all the content that is available online for free. Now, these are the changes that would have taken 30 years before, but now suddenly many educators that would have struggled with this or would have been against it in principle are coming to terms with the fact that there is a whole wide world out there of online education. So I'm experiencing in my own life rapid growth, and I'm seeing it through, as I said, the company Snaplify that has made all the educational textbooks available for free for this year, that there's such rapid adoption. And that's a positive bit out of this, is human inventiveness and human ingenuity has not gone away. We will adapt to these new circumstances, however tough they are.
Final question for you, Michael, is where do the opportunities lie?
Right. We speak about the 4th industrial revolution as if it is something very, very far away. And yet there are so many parts of this industrial revolution that we can grasp already today. It's often said that we as humankind don't struggle so much at believing a new idea or a new concept. It's letting go of the old that gives us the most struggle. So I would say the opportunities lie actually in letting go of old ways of doing it, old type of business practices, and just looking what would be possible. And one little mind trick that I'd like to impart is, don't think of what you think will be obvious next year or in 3 or 5 years. Think of what will be obvious in the business world or the economy in 10 or 15 years' time. And if it's obvious that it's going to happen in 15 years' time, start working on it now. You may have a small business, but it will grow very fast if you're on the right macro trend.
Sure. That's very similar. I was reading through Daniel Eck's quarterly report back to shareholders of Spotify, and he said that there's a 20-year trend from linear to on-demand consumption, and obviously they're in the podcasting and the music game. But if you look across the world, he's taken that view, a 20-year view, and of course it's happened a lot more quickly. Michael, sorry, final question. Another one that just popped in here from Dion Kutsia. It's a bit of a Warren Buffett question. He says, if you could take a position in one bank apart from First Rand, then what would it be and why? And then, of course, what Buffett always asks is, what would be the last bank stock that you would recommend and why? Have we lost you? I think that was a convenient, Michael. Yep, David. It was unfortunately we've lost him. Dion, I'm sure that he will respond to that. I'll send Michael a copy of the question, and no doubt he will be coming through. While we're waiting for Magda, who will be joining us in a little while, Gigi, perhaps there are a couple of questions here for you, which I'd very much like you to apply your mind to. The first one here is, what is your view on the e-commerce sector vis-a-vis the informal sector? It comes from Diana Coates.
So it's quite interesting listening to Michael, because I think there's a lot of parallels to what he says to the informal or the township economy. So I believe what's going to happen is, well, the starting point is, I guess, that behaviors that have been established over this time period will not suddenly change back to the previous. So whatever shopper behaviors, consumer behaviors, whatever will happen over this time and over the next 6 months will continue. So we have to look at those and say, well, what are those going to be? I believe that instead of online and virtual marketplaces that we'll have in the kind of Western or more formal world, the reality is it's going to be about local and neighborhood. So for instance, if I was investing in malls, I would invest in what I call strip malls closer to people in the neighborhood, because I believe that that's going to grow. I think that it's not going to be so much internet shopping as WhatsApp and Facebook. So as an example, I was sent an order form from a Sygnia in Soweto that has placed their menu on Facebook, and you can WhatsApp them your order with the PIN number, and they will deliver to you. So I think, if we look at online, WhatsApp, Facebook are going to be platforms that people are going to utilize more and more. And people are mistrusting of internet, of websites. So, but they trust WhatsApp, they trust Facebook. So because they're relationship based, I guess, and group based elements. So I think that there's going to certainly be a growth of this. I think this is the opportunity. I wrote an article about it on LinkedIn. It's an opportunity for cashless payments, because I think that we've done very little. Everything's kind of look-alike, and it's all been about money transfer. I think the opportunity is going to be big for being able to go cashless, to utilize more innovative things than kind of e-wallets and money transfer. So the opportunity really is now. A lot of the traders that we're talking to are saying, well, I don't want to handle cash, because cash is actually a risk in terms of corona infection. So not because it's easier, but because it's actually dangerous.
Fascinating. Moving across, even in the informal economy, as you're saying, these trends are accelerating. David, your thoughts on what Michael Jordan had to say? He certainly put the mockers on the markets, in his view, anyway, and made a convenient departure just before that question about which bank he would like more.
Look, I can understand why markets are where they are, and I'm talking more in the global context of this, because these trends were already in place before we were locked down. So, if you look at the big players, whether it's Facebook, whether it's Amazon, Apple, and so on, all that it's done is made them stronger and brought this trend forward. And I think it's going to continue. And we've spoken before on this in the webcasts about healthcare and health products, and big developments there. Those are still going to be trends that are going to take place. Alec, I picked up another one. There's a very good article in the FT over the weekend by Satya Nadella, who's the CEO of of Microsoft, who mentioned that there were 2.7 at one stage. They reached 2.7 billion minutes, meeting minutes on Teams, which is their program. Before the record was 900 million. So I think these just play into this, the ongoing benefit of technology. But I want to end on one point, or just end this. The question is the one thing that we're ignoring, and Michael spoke about education, is that there's vast differences in the population. There's a huge group of people who do not have access to broadband or to this kind of technology. And that's the poorer people. And this is a global thing as well. By closing down schools and going this way, we're actually ignoring the education of a vast amount of people who are going to continue to fall behind the rich. So I think when we go into these areas, when we start to develop on a technological path, you've got to include those people who can't afford it or haven't got access to it as well. So it's a very, very important aspect or element of the so-called move for this path forward.
I've got Microsoft on the screen. Sorry, Gigi, I've got Microsoft on the screen, David, and I know that around mid-March, my pal Alan, not Craig, who writes for us from time to time and who actually has done a huge amount in getting Wi-Fi to informal communities. He said because of Teams, because of Microsoft Teams, which you mentioned, he would be buying the shares. And my goodness, they've gone from around $140, as you can see there, to 175. So that was quite a good call. Apologies, Gigi.
Sure. I just wanted to add, I think that in terms of what David was saying, the low data or data-free platforms, I think, are going to be very successful. There's a hash data-free platform, a South African one, with a product called Moya Messenger as an example, which is basically you can free apps and free messaging. I think that big people's issue is that data is still expensive and that most apps and most online elements are very data hungry with high visual content or video, or whatever it might be. I think there must be a huge opportunity. If you just look at that hash data free platform, there is going to be a need for that. And I think you'll see, people like Township School able to utilize that kind of platform.
Alec, what worries is, in most households, you've only got one laptop. You don't have 3 laptops. So if you've got 3 kids there who have to be educated, even if they are remote, you haven't got the equipment, and I think it's absolutely imperative. And I'm big on health in this respect as well, that this is the socialist side of me coming through, in that, these areas are the areas that have to be addressed first. Number one, access to health and good health, and also access to this kind of technology. If we are going to uplift and address the glaring differences that we have in this economy, and I suppose it works globally as well, these are areas that we have to focus on in a big way.
We do have a president who, in the State of the Nation address last year, said he's going to put a tablet in the hands of every school child. I guess there's no better time than to resuscitate that dream now. Louis Gerung, another old friend, asks David, what is the sentiment now on active versus passive investment strategies?
Well, I've always been active. And I think while the downturn was across the board, I think the upturn is going to be very much more focused. You can't just buy a passive investment. You're going to have to be very careful where you put your money. And if you listen to Michael carefully, he identified it. He identified the businesses, those that are not burning cash, those of cutting down their expenses, converting their fixed expenses into variable expenses, and so on. So you've got to be much more conscious of where the business is going, and what its product is, and what its balance sheet looks like. And therefore, a lot more selective about where you put your money. And that's why I'm saying, from an active point of view, do your homework and do the reading.
But you didn't answer it, Dave. He
What was the
wants
word?
to know, is the money going back to active? Because presumably good
Yes.
fund managers would be buying Sasol at $20.
You know, yes, that is happening. So as institutions go into cash, what's been driving the market up has been the private investor. You know, much more retail investors coming in and looking for opportunities. So the trend is much more towards active. Yeah. Passive, going cash, getting out of the market, taking protection. I think the retail investors are a lot more bold and, you know, looking as to where we're going to be in a few years' time when we come out of this.
There's an interesting graph for you when you have a look at Sasol's graph today. I keep mentioning it because so many of us went, including in our portfolio, bought it in the 20s, and you can see there it's had a big bounce from where it was just after 12 o'clock today to since we've been talking here, it's got to $81 from 76.50. There's a question here for you, Gigi. It comes from George Mayring, who's obviously in Port Elizabeth. He says our painter in Walmer Township mentioned that the food parcels are collected in excess by some who then sell it to Somali spaza shops who break them up and then sell it into the Walmer Township again. Do you find this?
I have heard many stories of this. I mean, there's obviously been a lot of stuff on social media claiming councillors and politicians selling items. I have no reason to doubt it. I have heard lots of stories about it. I can't, but I would say that the Somali traders are traders first and foremost, and if they can get cheap stock, they're going to buy it and resell it.
It's quite. Well, I suppose it's one of those unintended consequences of trying to help people. David, there are quite a few questions here. Would you buy both ASML and the chip makers and semiconductors?
And no doubt. ASML is the Netherlands company that makes the machinery that allows you to make the semiconductors. They're under a bit of pressure, as all markets are at the moment. They've run very hard. I'm taking a view of this so-called digital economy, which I think is just starting now. I think it's going to get a lot bigger than it is at the moment. And ASML is well placed, and it's got progressive technology. I can't explain it in technical terms because I have to have it in front of me, that it's selling now, the kind of machines that it's selling now. But it's a very, very high-tech company. And Alec, you can associate, you remember Buffett went into Israel and he bought this high-tech business, Iscar. Well, I always think of Iscar when I think of ASML. It's just one of those businesses which is just so way ahead of its competition. And there is competition, of course, in South Korea and other places that do make this kind of machinery. So, but a superbly run business and pays dividend and run by Deur Hollanders. You know, when you listen to them, they tell it how it is, and they just see good times ahead. So. Very, very well placed for the expansion that we're going to see in the digital economy. Still buy it.
Use the recent weakness around 250 euros. You might have missed the 175, but that's what David's telling you. Agash Pillay asks, how do you get exposure to Tencent? Is it via Naspers or Process? Actually, it's by both. But he says as a follow-up, can you explain the holding between Tencent, Naspers, and Process? Do you want to give that a go, David?
No, I'm going to get all confused. But Process holds Tencent, and Naspers holds Process. So I haven't got all the formula and all the different cross holdings here. But effectively, if you do your work and if you set up a model, you will find gaps that emerge that makes one cheaper than the other. But there certainly are gaps between Tencent and Naspers, and then between Process and Naspers between Tencent and Process, and then Naspers and Process as well.
But if you're an amateur investor, you do know that there are experts like David Shapiro who are taking advantage of that arbitrage situation. So just buy and hold for the long term. I would suggest to you, Mogash, my view, buy Naspers in South Africa, you live in South Africa, you get it at a huge discount. All the way through, you're getting a big discount on Tencent. But let's go to Neil Boyce's question. And he says, guys, why are a big business so silent when it comes to crazy laws and draconian attitude? As Gigi will confirm, we have a crisis with regard to our informal sector and poor people. Government is still playing politics and big business is quiet. Gigi, thoughts?
Yeah, look, I mean, I think big business is playing a political game to a large extent. I think that we come from a government that believes in a welfare state, that it believes in a socialist economy. And so they would rather dish out food parcels, even if the numbers don't make sense. I mean, if you just look at the numbers as an example, we've got about 16 million odd households in South Africa, and we're giving out like 100,000 food parcels in Gauteng and so on and so forth. So I mean, we're never going to fill the gap, but we do have a government that believes in a welfare state, and I think that you know, no one wants to irritate the government. So there's a lot of political games going on, and I mean, the immigrant story that I mentioned earlier is an example. You know, it's the elephant in the room. It's you know, we have hungry people, and yet politically we are all just saying, no, let's give only South Africans. So yeah, we don't have a history of big business jumping up and saying unpopular things, I don't think.
Well, Magda has joined us, Magda Wadzicka, who's the founder and chief executive of Sygnia. Magda, you're just going to need to put your microphone, there we go. And I've got to tell you guys, before we bring Magda into the conversation, Magnus Haystack emailed me something which kind of blew my mind a little bit. He said that Magda's company, Sygnia, is the biggest single shareholder in the Oxford Scientific Innovation Fund. Now, if you've been following BizNews, we had an interview with Adrian Hill, Professor Adrian Hill, a couple of weeks ago that our colleague in London, Linda van Tilburg, did, where he said, no way, of course we're going to win this vaccine race. We're going to get a vaccine for COVID-19. And yesterday, on Friday, AstraZeneca said they're going to start making this vaccine that Oxford University is producing, Adrian Hill and co. And Magda is the biggest single, or Sygnia is the biggest single shareholder in the company that owns all of the rights, lifelong, for all patents and inventions from Oxford University. Magda, this sounds, as I say, it kind of blew me away. First of all, how did you find out about the investment opportunity? And secondly, where's the flaw in my argument here?
Well, there isn't, but let me take you through the layers of it. So Oxford University in 2015 struck a deal with not being being a academic institution and not being very good at commercializing the IP that comes out of Oxford. It struck a deal with a selection of top brand name asset managers in the UK, but it includes people such as Goldman Sachs and Sequoias, and they established a company called Oxford Sciences Innovation, which basically owns, or at least the right to commercialize all the IP which comes out of Oxford University. And it's an in perpetuity deal, and an exclusive one at that. So basically, the way it works normally is if you have an academic or academic team, they come up with some innovation or some great idea, they register a patent. What happens to that patent is that Oxford University owns 50% of the rights to the patent and the academic staff owns 50%. So in this transaction, OSI then takes a look at the patent, and if it deems it to be worthy of commercialization and turning into a company, it then sets up a company, and right at inception, before any money is actually transferred from OSI into that company, OSI owns 25% of the shares in that company, Oxford University 25%, and the academic staff retains 50% stake. And then, of course, the very next thing that happens is OSI needs to seed that company with capital. so that it can hire a management team and start working on developing a product or a service. And of course, at that stage, the only people injecting capital is OSI. And OSI, when it started in 2015, had 600 million pounds on its balance sheet. So OSI deploys capital. The moment it deploys capital into that spin-out company, it effectively, the percentage ownership of that spin-out changes, because Oxford University doesn't typically put in any more capital, and obviously neither does academic staff. So, by the time these companies are sizable or sufficiently sizable, OSI tends to own about 50% of each one of these spin-outs. And of course, as they grow, other validating capital comes along, other investors come along as those companies raise capital. And since 2015, Oxford and OSI have spun out 80 companies. They spin out around 10 companies a year. One of those companies is Basitec, which is the company working on the COVID-19 vaccine. And because they, in fact, have been working on the MERS vaccine, they had, heck of a head start on everybody else. So ownership of OSI shares was a bit of a closed club in the sense that the shares never traded. But last year in the UK, there were a few managers, asset managers, who were under stress because of outflows. And I heard you earlier talking about passive, so some of it had to do with movement of money away from active asset management to passive management, and they became forced sellers of the OSI share, or at least any shares that they had. I have been aware of OSI since 2015. One of our non-executive directors, big shareholder in Sygnia, Andre Crawford-Brandt, was one of the founding shareholders in OSI. But knowing about it and owning the shares are two different things. So when I became aware of the distressed asset managers, we approached them proactively and negotiated 3 different transactions and acquired the stakes in OSI, which means that on behalf of clients, we now own 16% of OSI, which makes us the largest shareholder. We have a board seat at OSI as well.
That's an extraordinary story, Magda. So Andre Crawford-Brandt was a shareholder, and he's well known in South Africa for his times at Deutsche. And of course, he's been very successful in the UK as well, and a big shareholder of yours. So he spotted Oxford Scientific Innovation Fund, or OSI as you call it. He made an investment, obviously spoke to you about it, and then the asset managers who through COVID-19 that they were becoming stressed, put their bought them.
Alec, one of them was Neil Woodford. So a little bit of a John Bickard of the UK, very famous asset manager, accumulated a lot of publicity and a lot of assets on the way up and on the way down. And he was a big shareholder in OSI. So he was my first target. When he faced large outflows and I knew that he had a pocket of these shares, we approached Woodford and bought his stake in OSI. And then there were a couple of others.
David, I can see you just itching to ask Magda a question.
No, I'm on her side. I'm just asking, where is this in her fourth revolution? Is this on her fourth industrial revolution fund, or is it held in some of the ETFs, or is this just a private holding that they have?
No, so it's held in a couple of appropriate unit trusts, such as the Fourth Industrial Revolution Unit Trust, but we also have an exclusive product called Sygnia OSI Fund. Obviously, the access to these shares is quite scarce, and so we've got a lot more commitments to the fund than we have shares available at the moment. But we are hopeful we can negotiate a couple of more deals, ideally. So it is a shareholding in some of our products, obviously the appropriate products, as well as being a standalone product where we offer investors access directly to OSI shares.
So if a private investor, somebody listening to this webinar, wants to invest, Would they buy? Would they then apply to become an investor in the OSI fund, in your OSI
They would just
fund?
invest in a Sygnia OSI fund. That's correct. And although it's an unlisted investment, what we've done for retail investors in particular is that Sygnia underwrites the liquidity. So you invest in the fund, but if you want to withdraw, we will purchase the shares and give you your money back at the prevailing market value.
What about this Professor Adrian Hill's vaccine and AstraZeneca's announcement on Friday that they're going to start producing it? Presumably, this will flow through to OSI at some point.
At some point. So Oxford University, as opposed to many of the American companies, is very adamant that they will never benefit financially as an institution from a global pandemic or a global disaster. So in terms of the deal between OSI and Oxford, there is one little carve-out which talks to global disasters. And so the deal is that Vasitech, which is the spin-out in which OSI has a 45% stake, is developing the vaccine. But what they've done is they've set up a separate company underneath Vasitech, which is also part owned by Oxford University directly, so that the IP is protected. And the idea is that they will develop the vaccine. They have already moved to human trials. I think 6,000 people are now in human trials. And they have, according to the Vasitech founders, 80% probability of having a successful vaccine by September. According to Sir John Bell, who is, the leading Dean of Medicine at Oxford, he puts the odds at 50-50. But still, and he puts the odds, much higher than on any other vaccine in development. So what will happen is that vaccine will be manufactured and sold at cost until a year after World Health Organization has declared the COVID-19 no longer to be a pandemic, at which stage, it will become a for-profit endeavor. So, in the meantime, it will be done at cost, if it is successful. But that's just one of 80 different companies that OSI owns stakes in.
Now,
there's some
Roelof Botha, who's another famous South African, who's I think
my best
lead
friend from university days.
Yeah. Oh, okay. So Magnus tells us that you guys know each other well from the Sequoia Fund. David obviously knows of, or do you know Roelof, Dave? I know his father. That's about the closest I get, and I know that Puk Botha was his grandpa.
Yes.
Grandpa.
Grandpa, just like you. But Magda, did he also encourage you to invest in this OSI fund?
So I actually saw Roelof in San Francisco in September. I went to see him, but he truly was my best friend at university. And then he left, as you know, he left South Africa. He became part of the PayPal mafia and subsequently joined Sequoia Capital and now heads up Sequoia Capital in the US. So in fact, Sequoia's holding in OSI is interesting because they hold the shares in OSI not in the funds that they run on behalf of their clients, but they hold it in the partners fund. So it's the fund that benefits the partners of Sequoia. Not dissimilar to Willis Towers Watson globally. They also have a stake in OSI. They also hold that stake in the partners fund rather than in the clients' portfolios. And, part of the reason is such scarcity of those shares. It's been so difficult to get access to those shares that when you do get a pocket of shares, probably selfishly, you hold it in your personal,
What an amazing story, Magda. It really is. Dave, you got a last question for Magda before we let her go?
Yeah, I just want to look where else she sees benefit. I know in the health side, what other areas she's looking at. Just reading Satya Nadella, he sees telemedicine as another big area. In other words, where you can consult over technology. So I just see it as a huge growth area and something that's going to be very positive down the line. But I'm just very interested in where else Magna is focusing her attentions for her private fund, not for us. We just want to know where her private money is going.
Well, David, I think when we invested in MSI in May last year, who could have envisaged COVID-19? I'm not going to for a second pretend. But, I'm looking at all the big drivers of kind of impact investing. So if I think of the world going forward, I think that active asset management will have a really tough time. It is having a tough time, overseas. Money is moving to passive. Investors are looking for cheap ways of accessing the market, the kind of listed markets. And whether that takes the form of passive investing, beta investing, active investing, it doesn't matter. It will all be about low cost access to market returns. On the other side of the spectrum, you have alternative investments. And there, I think, the big focus of most investors is impact investing. So it's anything to do with climate change, anything to do with healthcare provision, affordable education, affordable housing. And technology is the big enabler of being able to deliver that in an affordable, accessible manner to the masses. Previously was not possible. So we are looking, I'm hugely excited about obviously OSI, and within OSI, the convergence of healthcare and technology. There are a lot of really exciting companies in that portfolio. I know the COVID-19 vaccine is just kind of at the forefront of everyone's mind, but there are some, amazing healthcare type innovations within the OSI portfolio. So to me, healthcare will become a focus for investors, for government. And what's important about government focus is that government focus comes with grant funding. So for instance, Recitec doesn't need to raise money from external investors. It has received £29 million from UK government, with support for more if they need it. So all of a sudden you've got kind of, if you're an investor, you have access to non-dilutive sources of funding in that sphere. So climate change, healthcare, technology, those are my kind of areas of focus. And the business we're setting up for Sygnia offshore is an alternative investments business with, that at its core.
Magda Wierzicka, the founder and chief executive of Sygnia, thanks for joining us today and for giving us your insights into an incredible investment opportunity, Dave, that it just shows if you're in the right place at the right time and you've got the right friends like Rudolf Botha and Andre Crawford-Brunt, and you're smart, which we know Magda is, you can really share the love throughout the South African society. I'm going to ask you a few questions. We have gone over our time today, but there's so many questions. I'd like to really just jump into them and perhaps quick answers from you, Dave. Where do you see the Rand going in the next few weeks? This is from Pierre Goosen.
Oh, it's so difficult. It's so difficult to call. And as I mentioned on Thursday, the Rand was 1803. It's close to 1860, 1870 now. It'll all depend. Besides the cash flows in and out of South African investments, and that it's also going to depend on where the global economy goes. I'm a great believer that we'll get back to 15, 16 in the second half of the year when the global economy starts to pick up a bit of momentum. Maybe not that fast, but I still see. I see us on that course, as things start to improve, and as we start to get news of vaccines and other cures and better treatments for COVID-19. So it's hard to call. It's hard to be negative on the Rand at these kind of levels, short of a further catastrophe.
Yeah, so what you're looking at there is going back to where the Rand, and I've got on the chart now from the Wall Street Journal. So it would be where it traded pretty much up until February this year before it blew out above 14, as you say, between 14 and 15, and you'd see that as a more normal range for the South African. Okay, I'm sure that Pierre would be happy to hear that. Then there is one here from Mike Glatter. Can offshore funds invest in the Sygnia product? Mike, I think that Magda did answer that. Dave, she said that they're going to be setting up offshore as well.
Sure, they've got ETFs here. There are a lot of ETFs. You know, I must say that I'm a big, you know, where we can't get money offshore and where we're forced to stay here, particularly for Regulation 28 businesses, or where people do not want, you know, want to keep the money here. There's one can go into the ETFs. You know, there is a fourth industrial revolution. There's there are other products. I think the S&P 500. There are a whole host of different ETFs that you can go into. That's exchange traded funds, which are listed on the JSE that you can buy literally through an ordinary stockbroking account.
Peter Salter says he missed our discussion on Sasol. Surely it will go up after lockdown.
You know, it's a hard one. Sasol is such an emotional issue at the moment. You're calling the oil price, which has, you know, which could come under further pressure, which is not really picking up off these levels. You're calling the rand. You're calling their deal to sell part of the you know, part of the Lake Charles product. There's so many unknowns about the, you know, about the company. For me, it's dangerous territory, not because I'm anti-Sasol, just that it's just one of those companies which at the moment is very, very difficult to call because there's so many moving parts. So you're taking a big risk by buying Sasol at these points, simply because of those issues: the oil price, the rand, demand for chemicals, the Lake Charles issue, you know, so many of those things that you have to put together. And you know, if you read their statement that came out last week, it did highlight the issues that they're facing. And they're going in and cutting their salaries, cutting staff salaries, cutting management salaries in an effort to conserve as much cash as they can. So when a company is in that kind of situation, it is a danger sign. You know, you have to recognize that.
I've got the Brent oil price up on the screen right now, and as you can see, it's now got to around $26. We had a really good interview with Justice van der Spey a couple of weeks ago, a oil trader based in London, who was explaining why the WTI index went negative. It was really certain traders who were caught on the wrong side of it, and they had to pay people to take the contracts away from them. But this is the one that we watch in South Africa, and as you can see, it did lift up a little bit in the past few days from around $22 to around $26. Vitsa Post says the fossil fuel companies are likely to tank and internal combustion engines too. I doubt any new refineries will ever be built again. Ever is a long time, Vitsa, but we respect your view. Then we did ask, or Dion did ask that question to Michael. I want you to apply your mind to it, Dave, if you would. If there was one bank that you could be in, which one would it be? And if there was the last banking stock that you'd recommend, and why?
Oh, you know, I've always regarded the banks with great respect. I think they've always run very, very close to each other. They've always been well run. And to identify one, you'd have to ask an extremely good bank analyst to pick out one that stands above everyone else. You know, from my point of view, I've always been in both First Rand and Standard Bank, and I think that's just historical. But which one I wouldn't be in, I don't know. You know, Capitec has done incredibly well. Probably very, very vulnerable, although you know, very vulnerable in this kind of climate where smaller and medium-sized businesses are feeling a lot more pressure than in the top end.
But it is an interesting graph. Look at it on your screen now, David. I've taken First Rand and Capitec, and one always assumes that Capitec is the stock that is it's growing faster, it's going to outperform. And actually, they are dead in line from the beginning of this year. They are very, very closely correlated now, whereas, of course, if you go back 5 years or so, it would have been less correlated, and you can look at that there. You can see how Capitec has outperformed First Rand quite significantly on a 5-year basis. So maybe Capitec is becoming a big bank and its stock trading like a big bank.
It's so hard to, it's so hard to work your way through where we are at the moment. And I think that Michael said, this is the situation has humbled us all and has made us rethink of where we are. I think a lot of banks at the moment, if you think about banks, they're under quite a bit of pressure. They're going to have to put huge amounts aside to cover write-offs, bad debts. You're not going to see an increase in trading activity at the moment. So I think they're all going to feel the pressure and again have to withhold dividends in order to conserve cash, which has been a recommendation from the regulators. So I think most banks, are going to find themselves in very tough conditions now, and that would include even finance companies, that are listed on the market, which I would assume includes our own business, Sasfin. And that it's a very, very difficult time. Which one comes out? I think they'll all come out. I don't think anybody's vulnerable. I do not think any of our banks are vulnerable. They've been incredibly well run and very well regulated and very well capitalized. But you can't ignore the kind of economy that we're in at the moment. So, just be cautious on the segment. If you're looking for growth and if you're looking for shares to go, if you're looking for survival, they're okay.
Dion, I'm going to be a little more specific than David. He's hedging his bets there. And I would say get out of ABSA. That would be my worst bank to be invested in. As you can see here, it's the golden line on the chart. Capitec outperformed, FirstRand in the middle there with the black line, and then ABSA underperformed. And I'll tell you one of the main reasons for this. I had a chat last night with Brian Beeler, who's the MD and part owner of Hazelmark, which is one of the big estate agencies. He reckons they have been doing a few deals during lockdown, and the prices of houses that are changing hands are dropping dramatically. He reckons that house prices, when we come out of lockdown, when estate agents can start trading again, are going to be anywhere between 10 at the lower end and 20% lower than the already depressed prices they were at before we went into lockdown. Now, just extrapolate that. Which is the bank that has got the most exposure to mortgages? ABSA by a country mile. So a consequence of that would be, for me, I would say probably Capitec or probably FirstRand at these levels, because Capitec is now going to be operating pretty much like FirstRand, and we know the incredible job that Michael and his colleagues, Michael Jordan and his colleagues, did at FirstRand in positioning them technology-wise for the new world. And so they will benefit from the changes. But on the other hand, the one that has to be most vulnerable must be ABSA. David, I really want to finish off these questions because you've got to go. But what is your most contrarian investment idea currently not held by your peers in the industry?
The fact that I'm bullish, probably, that I continue to be an investor, and I think from a contrarian. Okay, I'll give you my contrarian bit, and I actually mentioned that this morning. We're very negative on air travel. We're exceptionally negative on the whole industry. Buffett sold out of his airlines. I've been a long follower of Airbus. And it's a very solid company with about 10 years of orders. The problem is it's under a lot of cash flow issues at the moment, and therefore has been sold down. But it's when things change, and they will change. I think you're gonna find them incredibly cheap or dear at this kind of price. So that's my contrarian. But I'm saying at these kind of levels, at 50, it's at what's that, €54 a share. You're actually buying an option. There's very little downside there. I think you're buying an option for the upside. So don't expect any returns in the next few months. But I think after that, when things normalize, this thing can get back to where it was in the 130, 140 area, and that. So that's my contrarian choice at the moment. But just be patient and, don't look for any immediate returns.
Well, there you can see it, €136, euros before COVID-19 started cracking us. Mid-February, €138. current price, one of 54 euros. And I suppose on top of that, David, with all the money that's being thrown at the problem by central banks, the assets have to appreciate in relative terms, or versus the money that you're talking about. Okay, two last questions. Investec Bank, what about that one? That's from Janet.
Yeah, I think like the other banks that we've been discussing, and Alec, that was a very good point you made. I think exactly that. ABSA's exposure to retail mortgages, a very big, big issue, and well thought and well presented. Investec worries me. It worries me in a sense of, well, what does it do? Where's it going to position itself in a situation now that it's lost the asset management side? Where does it make money? What's special? What speciality has it had? God, that it's going to outperform the other banks. So I think its golden days were in the 90s. I've got a lot of respect for Stephen Kossoff and the management, etc. But I'm still battling to know where it's going to make its money, going forward in this kind of economy. Certainly not in the UK. It's going to have troubles here as well. You have to understand the background of Investec and how it came to be where it is, and the clientele that it built up, and that's what's troubling me. It's almost like Liberty, Liberty Life, who made its name in the 70s and 80s with a very specialized area of the market. I think Investec is in a similar situation. So I'm indifferent on the company, and that's no reflection of management or any, it just doesn't excite me.
Wow, you have a look at this long-term graph going back to 1996, and you can see there that we're at share prices today that we were at 12 years ago, and in the run-up even 14 years ago, under 40 Rand a share, and yet it's such a good business, David. You, as a client of Investec Bank, I don't know. I think Discovery is a fantastic business, and they're probably going to be chewing away at Investec's client base. But unless there's a culture change at Investec, it's going to be very hard to shift those clients across anywhere. And yet, look at this share price. And they're big in London. They're a big operation there, and very successful there. Who knows? But I guess that's the final question here is, again, from Vitsa Post, who says a big risk is the car finance market, big losses coming, especially with those balloon payments. And I guess there, when you talk about First Rand, you've got to look at Westbank. Of course, ABSA, you look at Bankfin, or I think it's still, is it Bankfin, or called ABSA, whatever, car finance. So there are lots of questions that exist there, and excluding both of those areas, I've changed my mind, by the way, on the best bank that I'd go with, is Capitec haven't got an exposure to home loans or an exposure to car finance. So maybe that's the one to be looking at. Dave, we've indulged you for a longer than usual today. Apologies for that and for keeping you here, but it was a particularly good episode of our webinar or our podcast come webinar. Thanks for sharing, as you always do, your wisdom so freely and so generously with us. And we look forward to being back again, same place next week. And hopefully I'll get my webcam working, and you can at least see that I'm not here in my pajamas. Thanks everybody, and thanks for the attendance and for all staying. Pretty much everybody kind of stuck around with us for this lengthy hour and a half almost session, and we look forward to being back in your company with BizNews Premium subscribers again next Monday. And don't forget, we've got the open air for everyone on Thursday. Apologies again to all the people who weren't able to get into the webinar last Thursday. We had, Dave, can you believe this? We had 500 seats. They were all taken up before the thing started. We've now gone to a process where we can get 3,000 seats. So if we get to a point where that's all taken up as well, then I'm just going to have to throw my hand in the air. But unfortunately, we have made plans to make sure that we will be able to accommodate everybody on Thursday. So, but Dave will be back again on Monday. And thank you once again for your support of BizNews. And we look forward to being back with you on Thursday. Till then, from Alec Hogg, cheerio.